Good afternoon, everybody, and welcome to the live stream today. Oh, hello. Let's get the screen sorted out in the background. Streaming screen. You never change. What has happened to you? It wouldn't be a block party live stream without some form of technical issue, would it? We have power. There we go. There we go, cooking on gas. Okay, amazing. So right now we are half an hour away from the unemployment data. This is without question going to bring some volatility. I got into a scalp a little earlier on. By a little earlier on, I literally mean like about, at best, 45 minutes ago. And I wanted to just see if there would be a little pump going up. And yeah, capture a little bit of profit. But, you know, at the end of the day, what I've learned on the past kind of streams and stuff like that is just sticking to what my strategy is, which is just taking the signals as opposed to over-analyzing them ever so much. And as you can see here, we've got a signal. We got in, and yeah, like I said, you know, it is the flexibility that you have with this indicator is that you can just aim for a better entry, let's say. So if it does go down a bit, yeah, get a better entry, aim for that, like, even if it's 0.1, 0.2%, it doesn't matter. It's like a better entry is a better entry, because as I always say, you know, it will also bring down the take profit target if you want, or it'll increase your total take profit amount that you can get. So it'll turn your kind of like risk reward from 1 to 1.1 or even 1.2 in some circumstances. So it depends which route you want to go, whether you want to take the bigger profit or the more guaranteed, not guaranteed, but more likelihood of hitting that take profit. So what's quite good at the moment, actually, let's jump into the analysis for this latest day trade, scalp, is we took the trade just here, as you can see. Interesting, we'll talk about the color of these lines in a bit. And then we broke out here, we got a bit of a rejection, and we're just trying to break out again. And so we've got a trend line that's just, not just appeared, but that has appeared here, which is where we got rejected from before. And in all honesty, we can extend this trend line a little bit further. These trend lines here are pretty much auto-generated. I don't like that rejection. Come on, keep it up. Yeah, there we go. Some people are relatively bullish on the, what's going on with my tools? Some people are relatively bullish. There we go. Oh, well, it's on there now. On the unemployment data. So in a nutshell, what's going to happen is, oh, there's another trade there. Should we take that? I'm not sure if I'll be able to get in. What kind of damage are we dealing with on this? Like I said, I'm already in a trade, but as per learnings from last time, I want to be making sure that I'm taking the trades 0.56%. And that would be a 1,786, 1,786. I'm not going to chase that trade because it's going up pretty quick. I'm just going to set the limit buy to the price just here. We're not going to chase it, like I said. So let's open that long and see if it'll fill. On open order just here, as you can see. There we go. So buy long has just appeared there. You can see on the screen. If it retraces to there, we'll pick up that order. Be good actually to get the take profits in there. So let's pull this back. A little bit dangerous kind of trading going into announcements, but it is what it is. I wanted to come on at this time because there's quite a lot of exciting stuff going on. There we go. We should have filled that order now. think. Or have we pumped past that? Everything is a little bit slow today. Let's close some stuff down. Yeah, we should have filled our second long order. And I've put my take profit down to 0.56 here. Stop loss even. Don't get those two mixed up. And there we go. So our position should be bigger now. And let us add a it's retracing a bit. Hopefully that doesn't continue down. We can pump up nicely. We can even oh, it's going very slow today. 0.068. Excuse me for the noise, just need to do a little bit of maths. 0.1298 minus 0.0686. So I want to reset in my take profit and stop loss because it's kind of like a conjoined order or accumulated order, if you will. Well, that is dumping heavy. Let's stop talking and make sure I get this stop loss in. Quantity 612, that's exactly right. Good-o. Stop level. Okay, right. So we've secured our stop loss and take profits. Now all we're going to do as usual is flip the take profit from a market order to a market order onto a limit order, just so we take advantage of those amazing fees. And there's the, you can't see it on this screen, but the take profit is now in. So let's just flip that around. We've got the profit level price here. Make it nice and easy and quick. So let's close. God, it is going extremely slow today. Quantity, going to go for 0.0612. And then wait for that to appear sometime this year. So there we go, we have all of our orders on there. Bitcoin's got a heavy rejection there from that trend line that we identified just a minute ago. So we'll see how this plays out. On the flip side, you know, we do have a nice little bit of support underneath here. So let's try and draw that on. Yeah, I guess we're kind of at the mercy of the Fed at the moment. We'll see what happens. I know there's going to be a quick move, so my orders are in place. I'm probably not going to be able to react to it whilst we're streaming due to the lag at the moment as quickly as I'd like to, but you know, we'll see what plays out. In a bit of a nutshell, the unemployment rate, this is the one that we want to be looking at. Anything above 3.6% is meant to be bullish for Bitcoin. And, you know, as jobs increase, then interest rates will hopefully go down in the next announcement, and that will essentially lead to less desirability for the dollar and more desirability for things like gold and Bitcoin specifically. So if that's the case, if we do come in higher, then it's a double-edged sword, isn't it? It's not so great really for the economy. Nobody really wants to hear that news, but it'd be pretty good for people who are long on Bitcoin and assets like that. So ultimately, certainly with these trades, we wouldn't mind it coming in a little bit higher than 3.6 and then taking a bit of profit. So I've not actually, like I said, the only trade that I've done today so far is just this one that's on the chart so far, and that was off the back of these two signals down here. So nothing crazy. As you can see, it's just been super consolidated up until now. So we've not really, like literally not had any opportunities. It's not that I've missed any. We've just not had the opportunity to take any. But it gave us the opportunity to do a good few little analysis videos. We entered into a GALA trade earlier on, a short, and so we'll see what, we'll have a little look at the GALA trade once the data comes in. You can see we're having a nice little pump here. This is brilliant. What a nice candle. Okay, great. Keep that up. And we're pushing up really nicely now. So we are coming to the pinnacle, the point, the end, the final furlong of this consolidation, of this little move. So we'll see what happens if we break up. Great. I'm pretty confident that we'll continue to go up. There's going to be, what happens usually just in the run up to these announcements is there's a lot of speculative buys and sells. So this will be no different. However, there is kind of a little bit more, little bit more favoritism towards an actual bullish move to crypto leading into this one, and that's based, no one obviously knows, no one actually knows the data apart from a few select key individuals who are very within that inner circle. But in regards to like influencers and stuff like that, and strategy people, traders and stuff on the internet, they probably know about as much as we do, which is to be expected. But like I said, I think the general vibe is leaning towards a bullish move here, at least for a very, very short term. So we would be happy if this comes in around about $10 or 10%, let's say. Super happy with that. I'd be super tempted to close that pretty quickly and just lock in that profit. In total, we are up 62.5% on the entire account in about 13, 14 days. I touched on it in the last video. We're not going to talk about it too much, but had a real bad day on the 2nd of May. After just a really great run up to it, and then really bad day there, some bad decisions. Some of it was actually, it was like my fault. I hold my hands up there. Then followed by the best taking day of the run so far. So we did 31% in one day, which was a nice kind of redemption arc, certainly. And it's nice. It's nice when that happens. And when you're trying to just grow your account and stuff like that, it is so demoralizing when you hit setbacks like that. But the reality is, it's just a lot of the time with this style of trading, it's just awkward timing, because we know that generally long term, this indicator and these signals, they're profitable. They rank around about 60 to 70% win rate. You don't have to do a huge amount around that, but this is like a 60, 70% win rate based on 24/7 signals. If you're just taking every single trade, it will average out around about that. But the reality is you're not taking every single trade. The reality is you're probably trading in sessions. So it sometimes depends what time you start your session, what time you end your session, as to where you may end up on that day. And yesterday, not yesterday, but on that particular bad day, we ended up on the downside. And what is frustrating is I actually did a full back test of every single trade that day that I could have taken had I been trading. And this is not 24/7. This is every single trade from like 9 till 5 and then 7 till 12. And I've ended up like 30% up on the day. But it's all good to look in hindsight, but the reality is it's what do you do in the here and now? So with that in mind, actually, I missed this long here, which is gone a little bit too far now, if I'm being honest. It might retrace back down, which it's looking like it could do. So we could contemplate getting into another long. Again, I am super reserved this time because we are definitely going into a period of volatility, and like I definitely know that that's definitely going to happen. So I think, you know, the reality is I kind of wouldn't mind just locking in profit and getting out of this trade. And if we get out of this trade at like 10% up, then that's amazing. You know, 10% on a day's trade is just awesome. But we'll see what we get. Like, even if I get 5%, if I get 3%, I'm currently 3% up on original account balance now. So, well, it's actually 4.5%. It's rocketing up. Okay, keep this up, guys. But if we hit 10%, then I'll very likely close it. Especially if it happens before 1:30, that would just be awesome. And then I don't have to worry about what comes after. But let's see where we're at. Problem is, it is such a small move right now that a flash close or a market close, if in panic, wouldn't be ideal at all. It would actually, those fees would hurt me quite a lot. So we're not going to take an eye off this this trade at the moment. We'll see how it goes. And if you're not already, definitely check out this website called cryptocraft.com. There's also a sister site called Forex Factory, pretty much identical. Same company. This must be the same company because it's the exact same UI. Absolutely amazing for all this kind of data. Updates pretty quickly. What you'll see here, as it nears like within 5 minutes to 2-3 minutes kind of thing, you'll see a refresh icon appear, and you can just refresh the price and it'll tell you what it is. Not only that, but it gives you a nice little outline of what is to be expected. So actual greater than forecast is good for crypto, as we identified. 3.6 was forecast. 3.5 was the previous. So anything higher than 3.6 now, who knows what it's going to be. There's a lot of, obviously, bank FUD going on at the moment, but I don't see how that's really going to play into this. Interestingly, the US unemployment rate, we don't know, but if I had to put my conspiracy hat on, I think with the general increase of AI and the usage of it all, ChatGPT and stuff, that's probably going to cost quite a lot of jobs in the near future. So that's something to be aware of, and this could actually go up, or it could be on a gradual incline, whilst there's more stability around the whole jobs and everything there. Because, like I said, it really is doing a bit too good a job at everything, including such things. You know, you see AI being used for creating trading strategies, but it's the same shit, different day. To be honest, I mean, like with trading strategies. Yeah, sure. Like what it will do for you is program them, and I'm not perfectly. Like I think you still do have to have a good bit of understanding of it all, PineScript especially, in order to actually benefit from it. Definitely, because I've tried it a few times and it doesn't work straight off the bat. Maybe I'm doing it wrong. I don't know. But yeah, I've not had a great deal of success with it. However, I think it'll be good for experienced traders who just don't want to go down that learning of development route. But we'll see. However, it's still the same thing. Just like kind of typing in, I want a strategy that does me 2,000% in 4 hours. I'm sure what it'll do is it'll work that out hypothetically on a backtesting front. But how that works moving forward, I don't know. You still, at the end of the day, you still have to have that prior knowledge of trading and understanding and how to apply these, all of this data into an actual real life trading scenario. So I'm not saying it's never, but I'm just saying right now, just be wary of it. Don't go investing a whole bunch of money, your own money anyway. When I say that, I don't mean other people's money. I mean like kind of paper trading, fake money, Disney money. Use that instead. That's what it's there for. It's great. A lot of people, I don't know why, just veer away from paper trading. Very conspiracy saying, it doesn't give me a real aspect on what happened in real life. Even though like sometimes people are using just this for swing trades, it's like, well, I don't think it's going to impact the trade that much, guys. But yeah, I mean, each to your own. If you want to use your own money on an untested strategy, go for it. It makes no difference to me. But you're hearing it here saying I wouldn't if I were you. Lost enough money myself doing that. We're retracing a little bit, which is not what I want to see. But when I say a retrace, yes, we are in the 3 minutes, so don't panic too much. It is a 0.11% retrace. However, we are playing on this trend line. Let's see if we can actually select that. That'd be nice. Give me it. Give me the trend line. There we go. So as you can see here, the kind of trend lines that I like to use in this respect are the parallel channels. You can't see them up here, so I'll bring it down so you can see it. The parallel channels are what I generally use to draw trend lines and supports and resistances. If I'm taking a bit more time on the chart, if not, then I'll just use Alt and T and just use the standard kind of trend line. That's what it's there for. But when I like to do analysis on charts, then it's good to use these because trend lines aren't going to always match up exactly. There's always going to be a bit of a, needs a bit of leniency in there. So they're good to use because it gives you, once it starts to get a bit excessive and the leniency is really wide, then you start to see like, oh, hang on a minute, maybe I'm trying to make that fit. But if it ends up being a really tight parallel channel or trend line, then you know that's kind of quite distinct. It's very, very, for me, it's got a lot of conviction there. The fact that we are not slamming down right now makes me believe that there is uncertainty, but also, there's not conviction in that move at the moment. So we will see, I think, usually in about the next 3 to 5 minutes, some real moves coming in. Like I said, hopefully it'll go up. I'm going to be a little bit proactive on the close here. If it does end up pumping up quite quickly, I will probably close it because these things generally swing both ways. So hopefully it'll swing up first. That'd be nice. I'm not going to extend the stop loss on the hope that it kind of goes both ways, because if it doesn't, then if these both hit, that would be 20% down, which won't be ideal, but at least it won't be 30 or 40% down, which is what caused me the issues the other day, because I thought that I could be clever enough to beat the market. And what happened there was I was almost clever enough. Like, there was a wick of 0.01% that caught me out. But, it is what it is. You live and learn. So we are in profit. Ooh, even now, if we just took $1, that's 1% on the original account. It's insane. These are kind of quite big risk amounts that we're trading with. So don't go crazy. Like, don't do your entire account at 10% risk. Statistically, you should be fine, but the psychological impact that comes with that is something else. So, yeah, just use manageable amounts for investing and go from there. So I'm going to be sticking around on this chart now for at least the next 7 minutes, probably a little bit longer, and seeing what happens. Like I said, hopefully we get a nice little pump prior to it. There you go. See my beautiful face a little bit easier. It's amazing how, from a technical analysis standpoint, this is saying that it should pump up. But the problem is we can't just rely wholly on technical analysis right now. We've got news. So I would love this to be a breakout, little pullback, and off we go to the races. However, like I said, we're not wholly reliant right now on just technical analysis, we've got the news coming out. We haven't got a huge amount. We've only got like 0.6% realistically of bandwidth for this trade. So I'd be pretty sure that the stop loss or take profit will get hit in the next 5 minutes, whichever way it goes, or hopefully I can close the trade in a decent profit. Prior to it, like I said, 10% is my goal. If I see that $10 flash up, I am flash closing the crap out of it. I will eat up those fees happily. I don't care. But yeah, I mean, this is kind of like one of the things to just be aware of when you're trading into news. I don't mind so much. I find it a little bit exciting. It's not like I'm betting the house on it. But if you are kind of thing, sometimes it's just best to either trade afterwards or substantially before. I mean, like lock out all your trades at least 12:30 if the announcement's all at 1:30. That kind of thing, and just be conscious of it. And it's so easy to find out. Like I said, go to this Cryptocraft or Forex Factory website. You can see the calendar of what's coming up. You can go to the following week as well. So for instance, we know next week's going to be a big one. So we can trade Monday, Tuesday pretty happily. Then Wednesday might be a bit cautious on trading. Then we can trade Thursday and Friday pretty happily with Thursday. Sorry, I beg your pardon, not Thursday. And then we can trade Friday. So Monday, Tuesday would be pretty good days, and Friday for next week. Wednesday, Thursday could be a little bit risky. You've been warned. I know that I'll probably end up just trading through. Well, the thing is, like, what is kind of crazy about it all of the back testing that I've done for this, and it includes all the CPI data. It's not like it stops trading leading into it. It includes it all. So again, statistically, you can ignore it. But if you know that it's if you don't like the idea of it just being a straight up 50-50, then it's your decision. So bear that in mind. For me, that's one of the key things with Bitcoin mainly. That's like the key news that I follow. I don't really follow too much everything around it. Obviously, if there's any big news, like I mean, there was so much FUD around Binance. That caused a bit of shaking. Yeah, like I said, if it's really big exchange news, like I'm not saying FTX level, but generally that kind of stuff can cause a lot of dumps generally. And then, kind of mainstream adoption news is always good to follow. But it is just kind of... Oh. Alexa's picking up some random words. Okay, come on, we're getting to the business end of the deal now. We've got 2 minutes until announcement time. Let's pump up, guys. Let's take a load of money. And then sit back and relax with 10% up, or put my heads in my hands and cry with 20% down. We'll see which way it goes, but we're not far off. We've got 1 minute and 40 seconds, and we should start seeing volume creeping in any time now. Once we're out of this trade, good or bad, I mean, I'm not going to be crying too hard if we do lose 20%. To be quite honest, so like I said, we're 63% up on entire balance. Then we can take a look at some swing trades that have come. We'll get swing trade opportunities come through at 1 p.m. Oh, hello. Here we go. So here's the unemployment rate data. Right, gonna go maybe a little bit quiet for the next minute or so. Make sure that I'm focusing on this. One minute to go. Oh, hello. There we go. Right, we're going up, going up, going up. Push, 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 push. Yes, there we go. Order filled. Give it. And the limit orders as well. Whoo! Oh, you gotta love it. And then it goes straight down to stop loss. This is what we're talking about. Horrible volatility. But we got on the lucky end of the deal there. Let's find out what we've come out. 3.4. What an absolute lucky trade that was. Damn. Whoa. Oh, brilliant. Absolutely brilliant. I have no right to have won that trade, but who cares? So if you're wondering why I'm so happy, it's because I actually brought down my take profit for this trade, so both limit orders, down to here, and that, amazingly, they got filled. So that's 75%. Awesome. Yeah, that rocks. Okay. That is, see what I mean though? Like this like volatility is absolutely insane. Had that gone the other way, you know, I could have been stopped out. In fact, I don't think I would have been. Maybe on this trade here, I would have been stopped out, but I wasn't. So 3.4% is not particularly bullish for Bitcoin. To be honest, it's not particularly bearish either. We're looking around about 3.5, 3.4% would be a little bit bearish kind of thing. Lower than that, that's when things start to get a bit chaotic. But you know, it's not exactly holding ever so well. So who knows? You know, that we can see where that goes. But let's have a little update on our P&L. I've got to say that's probably, those trades never go my way. So I am celebrating hugely. We're just under 80% now on the entire account increase since the 20th. And that is, let's see, we're on the 5th now. So 15 days, we're up just under 80%, which works out to 80 divided by 15. So we're averaging around about 5.33% per day. Granted, I'm not trading every day. So a fair few days off there, a few days off there. Don't trade weekends. I mean, realistically, it's like 1, 2, 3, 4, 5, 6, 7, probably 8 days. So around about 10% per session, which is, you know, that's kind of like aiming towards what my target was. We are definitely not going to be putting any trades out for the next hour or so. But what we can do is we can take a look at some of the other opportunities that have come through on a swing sense from the 6-hour alerts. And there you go. You can see the trade that just came in there. Killer trade. Absolute killer trade. That was, oh, hell, that was a way bigger trade than I thought. Awesome. Okay, well, that was actually a 15% winning trade, which makes sense because I made 10% on one and 5% on the other. The maths. So sweet. I mean, that has more than beaten my total for today. Are they obviously today's P&L? 9.18% for today. No, not 9.18%. So that's based on the current total account. And I'm basing everything on my original starting balance, which is $100. And we're now up to $177. And then once yes, of course, there's going to be scalp alerts coming in. But we're just going to hold off on those. So this was full win. So that was a win. Full TP. And then this was a take profit early. Hurrah. Win TPE. But yeah, I mean, this is gonna. I don't think we're going to see much. I think this is about it, to be honest. I don't think this is going to be a continuation. It's not exactly like world-changing news. No real surprises. It's a little swing 0.1% either way. You know, if we see like dramatic drops, then yeah, that's the time to panic. Awesome, great. Small pat on the back for that one. Cool beans. That's really nice, actually. So we're talking about our next trade then. So this was a trade we set up earlier on, was GALA, and we're actually opening this trade at the moment. And we took this morning. So this was from the morning session trades that came through. These come through around about 7, 8 a.m., 7 or 8 a.m. We're currently on 33 leverage, and we're 50% up in that. And this is our target. It's quite a big old target. Like I say, you know, very, very aware that we have the announcements today, so I definitely don't want to make it too tight. But if we do have some more downside, that'd be quite good. Just going to take a little look at Bitcoin in a bit, because this move down could actually break some market structure, and we could actually see some further downside that we were kind of expecting in the short term to happen. But if you notice on this one, this is actually 0.9 risk reward trades, and a couple of reasons behind it. Like for me personally, this is as tight as I want to make the stop loss on it. Reason being is we do have what I deem as a significant or a poignant swing high there. But it's not necessarily a swing high. What it is kind of a consolidation, a little range. And yeah, it gets rejected on this candle here, and it gets rejected on these candles here with these wicks, and then it starts to crash down. So I kind of know that there's going to be some selling pressure there. But not only that, like this is also where the 50 daily moving averages and also the 20 daily moving averages. So for me, that kind of gave me a lot of confidence to place my stop loss there. But I didn't want to put it on this candle here, which would have been the more logical one. So had I have done that, then it means that I can bring my take profit way up, and we'd be in so much more profit right now. But the reality is, you know, I'm aware that we're going to have some volatility kicking off at the moment. So you just don't want to unnecessarily get wicked out when you just don't need to. And what is significant about this trade is I spotted it last cycle, say on this signal here, but we didn't enter it because we're kind of like sat very nicely on this support here. I did take this signal, second one here, because we had a clean break through this support. So yeah, I mean, unless we have a full market reversal, I'm pretty safe with this trade. And like I said, this is a 0.9 risk reward, not ideal, but reason being is, as you can see here, we have very significant swing low. There's such a high chance that it's going to get here and bounce. So if we had our, if we took the full one, even though it's a small amount below, it does mean that we can get down to about this point and people can start buying. And, worst case scenario, the price can bounce right back up and take you out. And, you end up missing your take profit by such an insignificant amount that it's just not worth it. Or the other thing, which I hate that happens, that just fills me with so much anxiety, is when the price comes down, and it gets right there, and then it just kind of like hangs out here for a little bit. You don't really know, and then it kind of goes down, which is great because you do take profit there, but then you could, let's say hypothetically, if you had taken profit here, kind of thing, where our 0.9% is, or just before this support, then we're in this trade for 2 days, let's say, instead of being in this trade for 2 weeks. So yeah, and you're waiting on for that. So that 12 extra days is costing you, is to make 10% extra on your profit. Is it worth it? Probably not. Like, is the exposure to risk worth it? Probably not. So yeah, like I said, I'm a huge advocate of taking profit early when it's within a, a nice kind of little scope. Don't be afraid to do it. Like people, obviously you have your structure. I don't believe massively in like increasing stop losses, even though I did it the other day. Like I really, as tempting as it is, and as you can see, it is so tempting. Like I did it, but they're the things that can really screw you. But things like taking profit early, it doesn't really bother me. Like sometimes when we have like a bunch of our swing trades open, they've been open for quite some time, and they're all sat around about, usually above about 50%. Generally, anything above 50% of the total take profit that we're in, I see that as relatively fair game, and I generally take a bit of a wider scope on the market. What's it doing? Is Bitcoin looking like it's about to explode? And I've got a bunch of shorts open that are above 50% of their take profit target. Are they all in profit? If they are, just close them all. Yeah, I mean, like that would be amazing. We take all the profit. If it goes down, it sucks. Like we don't take as much profit. If it goes up, massive pat on the back. But the likelihood is that, you can. It's nice to do like a hard reset, and you can start to then reanalyze the market and get loads of new opportunities going out. So yeah, like I said, don't be afraid to take profit early. I'm not a huge fan. I used to be a massive advocate of having tons of different TPs and stuff like that. But then you slowly realize that, you take profits, generally should have the most conviction out of anything. Like your entries can be relatively negligible to a degree, providing you can manage them well with your stop loss. And if you've got good kind of open trade management, then yeah, entries are kind of part and parcel. So with entries, interestingly, we love DCA, absolutely. But we always looked at kind of a concept of like 2 entry points and a massive stop loss, because then you get such a bigger stop loss, which is great. But half the time, like what we found was our trades were actually pretty good. Our initial entries were pretty good, and then they just ended up going to profit. And yeah, we ended up taking half the profit, but then we would always get 100% of the loss. So yeah, I mean, it seems very simple, just having one stop loss, one take profit, one entry. But over the years of trading, you kind of slowly come to realize that it's probably the best way. Now, when you're talking more about HODLs and stuff like that, really long-term trades, then yeah, it's not such a bad idea to take bits of profit on the way, kind of thing, to have significant milestones, which generally like attuned with price points. You can use Fibonacci for that, for instance. And like what I mean by that is, our BitGet's gonna be terrible for this. We need to go somewhere which has got a long, let's say, let's do Bitcoin for argument's sake. I've done analysis on this, so therefore my keyboard won't work. It's great. So let's go to BTC. On an asset that I've not done analysis on, I'll flip it to the 1 day, and I'll show you what I mean in regards to using the Fibonacci for this. I bet my Fibonacci is not set up for it. So sometimes it's quite hard to, once a coin takes off, and we're using Bitcoin here, which is probably the worst example, but once a coin starts to take off and you don't really know how to define what targets you're going for, and generally these are kind of like in a more HODL context, and by HODL I mean like assets that you have done your good fundamental research on. You personally believe that they are going to go to the moon, not literally, but you know what I mean. So you want to start kind of setting up your trade, and this is like a really great opportunity to use a DCA structure and also like multiple take profits. But again, like I said, it's sometimes pretty hard to figure out where to take these take profits. Yeah, I knew that this was going to happen. So for most normal people, they will have a Fibonacci. They'll have a Fibonacci which isn't customized to shit like mine, and they'll give you kind of extended levels up here. And you can actually use those levels to help mark where you want to go with it all. And in essence, like I said, I don't actually want to mess up my Fibonacci for the sake of showing this example. But it looks something like that. And so you can actually use these levels as a good indication of where to take where to take profit. The other route is you've got to assume, so this is worked on the assumption that there is no kind of historical higher data. So let's just assume that the price has started from here. These are setting all new highs, and it's such a struggle to figure out where to take profit on these new highs. The easiest way, personally, I've found is around about a percent or two, maybe 5% below a significant psychological resistance, which can be, so for this instance, 40,000. Oopsie daisy, jump back off this chart. So 40,000. So you want to be setting your, like taking some take profit around about kind of, 5% down or 2% down or something that is not so obvious, because there's a very high chance that a lot of people will have a lot of kind of newbie retail traders will have their take profits there. So it means that if you have yours there as well, you might not get your take profit filled. It might retrace beforehand, but the likelihood is a lot of the smarter traders will be doing exactly this. But yeah, I mean, going back to the Fibonacci thing, that is just completely hypothetical. I would prefer doing this method, which is kind of a little bit more sound reasoning behind it, to be quite honest. You can obviously use volume as well, as volume starts to heavily increase at certain points, and maybe you'll start looking at taking profit. It's a bit more of a dynamic approach to it all. And then, of course, like if you want to be really super dynamic and stuff like that, then that's when you start to look at things like patterns. So in this scenario, and this is kind of convenient because I know this is here because we've already done the analysis on it. But what we think is going to happen, it's following like a very kind of, it's not Dixie, so it's like Dixie was broadening. What we think possibly might happen is something like that. So we might want to, obviously we don't know what data has preceded this. There we go. So we don't know what's going to happen here. So maybe we want to set like a little bit of take profit here. Maybe we want to set a little bit of take profit there. And if you get it wrong, just rebuy. At the end of the day, like if you're in the asset for a very, very long time, rebuying, it's always a good thing as well. Like you can use this as two opportunities, right? With HODLs. Either you can take your money, so let's say the price moves up here and you take 10% of your total earnings. You can take that money and go off and buy a Lambo, that's fine. Or the other option is if the price goes from there, come on drawing tool, don't fail me now. So if the price then goes from there and it heads down again, then even if it goes down to here, rebuy it, because if you weren't doing anything, then the price would have gone, you would have just left your money in there, it would have gone down, it would go back up, or it would go down and it would continue down. Either way, you're not doing anything. If you are being a bit proactive here, so you can do one of two things. You can accept you're going to take some money here and that'll be your forever profit, or make a deal with yourself. If it does head back down, 5, 10, 15%, rebuy with that exact same amount so that you are now increasing your profit. And this is very much kind of based on what is your approach and what is your kind of commitment to this trade. Let's say you are committed to Bitcoin, XRP or whatever, SHIB, Pepe is now the new SHIB. So if you're committed to that for a year or two, then yeah, it doesn't matter. Like if you can get more assets at a better price into this asset that you're holding for 1 year or 2 years, regardless, then yeah, I'd probably suggest rebuying into that. Because as we see, like bear cycles can be brutal for sure, but they can also, they have an end to them. Just like bull cycles, they have an end to them. So yeah, just be conscious that if you're aiming to hold for like 1 or 2 years an asset, then there's a very high chance you'll win, because time is like the strongest weapon within trading. It beats technical analysis, it beats news, it beats everything. If you can afford time, then you put yourself in like the top 99% of traders and potentially profitable traders, and ironically, with doing the least work. So it's something to consider. But when you are doing HODLs, when you are buying HODLs, it's very tempting to buy a shitload at once. Really don't recommend that. Because there's always going to be opportunities, always, always, always. Unless you really know something that we don't, and you've got a lot of insider information, which can also be bullshit, then yeah, sure, go for it. But like I said, there is literally no point on this planet to buy your 100% of your projected allocation or targeted allocation on an asset for a HODL, because I can guarantee you that you have not got the bottom. I can guarantee you that that price will go down further at some point in that 1 to 2 years, even if it's a little bit, even if it's a lot. So yeah, like I said, don't dump your load too early. Sorry to sound so crude, but it's so true. Like if you think you've got the bottom, you haven't. That's what stop losses are for. That's what kind of things are. There's another question as well. Like, should you have stop losses on HODLs? Yeah, I don't know. Like, I don't think so, really. Like I said, time is your best friend with this kind of stuff. If you can commit yourself to a long-term attitude with these kind of trades, then stop losses aren't really that important. Like the money management and entry management of your DCA structure. So if anyone's wondering what DCA is, I'm just deleting that. It's on KuCoin. Cool. So DCA structure, as opposed to like what we'd do is we'd buy 10% here. This is how I would approach DCA structure anyway. 10% here. Fucking caps lock here. And then, you know, what you start to do is you start to find like key supports. I'll tell you why I've drawn these on here. That's a perfect one. There we go. So for instance, they look a little bit all over the place kind of thing, but the reason why I've drawn these lines on here is, one, this is your initial entry. Two, this is a very obvious support. So we've got a lot of price action here, pumped up, and then a bounce there. So we know there's likely to be a bounce there. And again, with these kind of buys, you don't want to be putting them below, you actually want to be putting them above. I have rushed these a little bit, so what I mean by that is you want to be putting them about there, because the chances are they're going to bounce before that. If not, they'll crash straight through. Not the end of the world, because that's why you've got the rest of these. And this is a very obvious one. So here and here, and so forth. But what you want to do is, obviously I haven't counted the trend lines and stuff, but I need to go back and do the maths on that. But let's say 10% here, and update this to 5%. And this is a very aggressive DCA structure that I'm going to show you. It's what's called the martingale strategy. And the logic behind this is that you're essentially buying increased amounts as the price is going down. And what happens there is your average buy price goes down very aggressively as well. So, there you go. Thank you. So your actual average buy price, so after your first, if you buy 10% there, you bought 5% here, you bought 10% here, your new buy price is just here at around about 28,000. The price doesn't matter, but the actual target of where we are. So this is our new average buy price. As it goes down further, then our new average buy price is going to be halfway between here and here, which will put it somewhere around about here. It's pretty bad, but do you know what I mean? So as opposed to kind of dumping your load in here at this price, instead with a bit of smart trading, you're already at 9% better price, which means already by the time you get back to your original buy price, you are going to have an extra 9% profit. It's just simple. And then you just do that kind of down here. Obviously, you know, you have to work backwards. How much do you want to invest, and how much conviction do you want to have on that initial trade? The easier ways, you know, there are other ways to do it where you can just buy every single dip. You'd need some sort of indicator or something like that. You can use like an RSI that's gone oversold. You know, let's say, for example, if we're going to use like the CVD as an example, every time this goes oversold, for instance, I'm going to buy. So, and I can buy equal amounts, because then it gives me like, let's say I'm going to buy one, I've got let's say I've got $1,000 and I want to put $10 into every buy. And I would just keep on buying every single amount, which means my average buy price would be ideally as good as it possibly could be. Now, the problem with that one is you might get to a point where you might not end up using all of your allocation. So right here would be all my buy points, because this is the bits that it went oversold, and I'd have bought here. Or then you can be more aggressive, whether you could buy 10%, let's say, so it gives you 10 opportunities of it being oversold to buy. Now, if you get to the point, you might be saying like, oh, Christian, like this sucks, because then I might only have 20% into an asset I really want. Yeah, that sucks. That is the downside to it all. The downside is, well, you're not going to make as much profit. Sucks to be you, kind of thing, right? But at least you're making profit, right? So it's one way to look at it. And the other way to look at it is, it's crypto. There's so many fucking opportunities every day, all the time. New assets coming out, Pepe, Sui, like these assets that just kind of pop out overnight. SUI, Sui is like the first asset we've seen in like a year that's had a proper launch, that's been everywhere kind of thing. It's had hype behind it. It's had CZ's tweeting about it, Justin Sun getting involved. It's had like the whole, it's going to be listed soon. Its trading's going to start soon. Widespread listings on all exchanges. It's the first time in like a year since we felt, and we're literally talking about this yesterday, it's the first time that we felt like coins are back, assets are back. People are starting to pump money into marketing again. For me, that's one of the biggest signs of the bull market returning, because when people and assets are looking to invest again and start to announce their hard forks and their, suddenly all their roadmaps got delayed during the bearish season, because no one's going to be buying, no one's going to be investing in that kind of stuff during such an aggressive bear season. They're going to be buying and investing when the price is confirmed and turning around. So with things like this, token launches and stuff, I think we can see quite a lot coming back into the market again. But yeah, so it's a little kind of a little insight there you go into DCA and HODLs and stuff like that. I know it's a very top line, but it is super important. Like longer term trades, that's a really good way to approach it. If you don't want to learn anything about the market, then I would say that HODLs are kind of your way forward. But they're not for me. I don't really have any long term holds for anything. The only things I hold is BTC and XRP. XRP is a no-brainer. Like I've said this so many times before, pretty much if you're in anywhere near me and willing to listen, an XRP is just such a no-brainer. Like, if it gets listed, if it wins the case, yeah, cool, it gets relisted on Coinbase and Binance US. Don't quote me on that. Then yeah, organic volume, it's super easy. Like it's just going to be a shit hot product on a very popular shelf in a supermarket. Of course it's going to sell. So yeah, that'll happen again, which would be great. Easy money there. But also it's like there's so many shelved projects that are going to be happening with XRP that we don't know about, but just need this lawsuit to go away. So it's not necessarily to be win or to lose, but it just needs to go away. And then once that happens, then they can start to announce it all. And you've got to believe as well that they've got a marketing plan in place that if it goes wrong for them, it's not even wrong anymore. It's so like the price has just hit its absolute rock bottom already, to be honest. So it's not going to, it's hit its max pain. So the only way is up, in my opinion, within certain, within reason. But yeah, XRP is kind of a bit of a no-brainer for me. The fact it's held on to such a strong market cap through it all, arguably the harshest, longest lawsuit for a crypto asset. But yeah, the precedents that it will set as well within crypto, I think, will have a massive domino effect. You'll see the Bitcoin price pump, which will be interesting. So like news for XRP will pump the BTC price. Obviously, things like Ethereum, which have kind of under the spotlight with it all. There is like a degree of like, if the XRP suit does go the SEC way, then Ethereum can come under fire. So that price will pump. Everything will pump. And yeah, lots of excitement will come back into the market. The Senate doesn't like Gary Gensler's view on crypto, and that's pretty obvious. He got an absolute roasting, and justifiably as well. Like he sat there like just a cat in headlights, which was awesome to see. There's few things few things. Like I would prefer to stub my toe than Gary Gensler stay in office. I'd prefer to get a paper cut than Gary Gensler stay in office. There's many things. I would even go as far to say as I would prefer to eat coriander than Gary Gensler stay in office. And now that is saying something. First world problems, eh? So let's talk about a little bit of analysis. We've got not a whole bunch of trades come in on the 6 hour. Whoa, let's have a look at that trade. So we've got really pretty much one trade on USDT come through for the 6 hour at the 1 p.m. alerts. I reckon we're going to have a whole bunch more coming in at 7 o'clock because of the volatility from the unemployment announcement, but the volatility hasn't actually been that crazy. Let's have a look at what asset that was. UMA. Look at you go, UMA. Where are you going to? Just a casual 52% pump. 50%. Welcome to the world of retrace. That's going to come down hard. Be a little bit wary on jumping in on that trade. A bit further back. So sometimes it's quite nice to trade these BTC pairs because what you see is all these really just crazy spikes. If you can identify a pretty half decent range within these, you can almost guaranteed get like some mega profit because it just goes off. And so with assets like this is a perfect example that you can get in a trade and providing like you can identify a pretty solid support, then you can almost always get quite a sizable profit on there. But it is such volatile trading against BTC assets. It really, really is. Like it's so unpredictable. I hate trading against BTC. It's kind of like 3D chess in a way. That's why I'm pretty basic, to be honest. I trade BTC and then I'll trade these 6 hour swings on futures, but not a huge amount around that because I don't really need to, you know, like might be worth getting on a longer time frame. This to me wouldn't be, that'd be why. I was like, what the hell? Why is it signaling me? Why is it telling me to go in a trade and not give me any signals? Okay. What's this signal looking like? That would be a successful one. So we're currently 1 loss, 2 wins, and this will be the 4th one. But we've got a very short look back. I know I should be on a chart that shows me a bit longer term context. But this is pretty nice looking, to be honest, not gonna lie. Let's get a bit of analysis going on. So for me here, this is a great example of why to use the parallel channels, because look at that. You know you've got a bounce here and a bounce here, and then 2 bounces here, double bottom. So connect those up, and it gives us a very, very solid support. That's great. And as well, like I know I talk about them a lot, and it's for good reason. Look at my lovely green arrow. That's horrific. Let's change color on you, boy. I've got to have some color coordination. I can't stand it. I know I've got a big green line in the back there, but got to bend the knee sometimes. Okay, so you've got an identified it's key support there. Like I said, I'm setting myself up for a fall here because I'm not looking back too much in the chart. I'm not going to be entering this trade anyways, to be honest. I might do. But yeah, like I said, I do talk about the weekly pivots. And yeah, right here, this has been pretty much completely filled. So for example, as this weekly pivot got notified, so on Monday or Tuesday, you could have taken a trade here. You could be very easily just set your stop loss down to 6.6%, and the price went like, 8%. Really easy trading, really easy. That was such an easy trade setup. Like you've got your obvious swing low for stop loss there, and you've got, a really obvious target up here of your weekly pivot. So that'd be a bit of a no-brainer. And as well, even with this trend line, we'd know that we've got quite a bit of distance before we start to hit this trend line. The only thing that would put me off a little bit is the 20 and the 50 DEMA. So it's worth, if you've got the indicator, it's worth definitely checking through assets on like the 6 hour, generally 4 hour, 6 hour, 4 for Monday and Tuesday, see what weekly pivots are untested and get some trades in. So it's a really nice way. And plus you've got all week to trade. You've kind of got a lot of the institutions in there. It's not that crappy weekend retail volume. So it's a really good way to go about it. I am quite liking this trade though, because if we flip this weekly pivot, we're kind of breaking out of this pretty significant trend line. We are a little bit above where I want to be entering. So it's nearly 1% above. It comes back down to entry pretty sharpish, then I might take this trade. But not only that, he's going up. Not got any divergences yet. So that's all looking safe. Safe, safe, safe. We're not overbought. Nice little range. This is the other thing as well. We could be looking at a longer term range. So if we take, let's say this top here, very obvious bottom here. And this to me does actually look a little bit more like a range. So as in that kind of thing. And then the only thing that I'd be wary of is where to set the stop loss. So there's two different approaches to this. Do you set your stop loss here? At which point we're still within the range. We could come back down, tag that and head back up. But it also gives us a more manageable TP at only about 9.25%. Or do we really secure our houses and put our stop loss down here? Which isn't, I mean, 13% is not scary at all. I don't really look at stop losses anymore as much like, oh God, that's 13.47%, because we're all going to lose the same amount regardless of whether it's 1% or 15%. But the way that I look at them is, you know, I'm incentivized to have a tighter stop loss because it makes my TP lower, more easy to hit. So you've got to be conscious of where your TP is going to end up. So if we moved it down to here, which would be, from a longer term context, this would be the safest place to put your stop loss. But also arguably quite unnecessary. However, since it falls neatly within this range, this would probably be the play to go with here, because I'm expecting a retrace for sure. And even if we do have, like if Bitcoin does have a pretty bad wobble, we've got a nice bit of bandwidth to play with. So yeah, I think I'll take this trade actually. I quite like the look of it. We're in a nice little range. We've broken out of this recent trend line. We've got no scary divergences. Yeah, why not? Why not? If anything, you know, we've got some pretty nice bullish divergences, so that's probably been taken. Yeah, let's pull this trade in. Trading. PNX. 1 TP to rule them all. Been on a bit of a roll with the futures trades, to be honest, at the moment. I think it's the past 10 or 11 trades have been winners. So let's keep that up. Double check that's all in. Yeah, let's go wild. So that trade is now, try sending it. Trade is now sent to everyone within Premium, and if you follow us on the CopyTrade as well, then you would have received that trade as we speak. Since I'm lagging so much, we'll have to wait a bit for it to appear, hopefully. And as we speak, there we go, new signal. There she goes. It took a little while. She needed to have a little think. She wasn't too sure. She was thinking about, should I go in? Should I work for you today, Christian? Yeah, I'll work for you. There you go. Signal's in. We've gone long on this one. We do have a bit of a mix of long and shorts open at the moment. I like to keep it spicy, but the reality is, like I said, I'm a big advocate of closing early and when need to. So it's one of the benefits of using Annie, because you've got me and my team looking over everything all the time. So we close trades if we feel necessary. So even if you do have long and shorts open, it's really not the end of the world. In fact, it's kind of quite beneficial. So it keeps you in a perpetual hedged state. And like I said, we generally close the trades when we feel the market is turning. Not feel, we don't kind of get out our crystals and stones and astro analysis, which does exist. Apparently, it's a thing. So look into the stars in the skies to define whether Bitcoin's going to go to the moon or not. Can't say I've ever divulged or really ever entertained it, but it's quite hilarious to look that what you thought was a joke is not, and people love it. All right, guys. Well, so you've seen that we've managed to make an amazing couple of trades earlier on. We've taken 15% live on the stream, 14.93%. Sorry. We've just jumped into a trade on BNX along, which we feel is in this kind of longer term range, which we're super happy with. But yeah, guys, otherwise, careful trading over the weekend. It's always crap volume and very unpredictable. Usually we see silly Sundays. So don't scalp too much. I don't scalp at all on the weekends. So yeah, keep it real. And thanks for watching. We will no doubt be back on Tuesday. Generally start trading around about, did live streams from about 12:30 to 1 p.m. UTC +1. It sets us up just nicely for some alerts to come in and enter some live trades for the swings. Gives me the opportunity to get some trades in the morning to recap on them when we show you. And also it will capture any kind of Fed announcements as well. And we'll make sure that we kind of move our schedule around that and as it works. So we'll keep you notified. But make sure you join us on the free channel to see all the updated schedules. And of course, follow us on YouTube. Please give us a like and a follow, because then you can find out as it's happening, hot off the press. But thanks again, guys, and we will